And welcome to episode number 40 of Daily Market Mastery with me, popular investor Christian Rauchenwald. As always, in this show or live stream, we are using the Elliott Wave principle or Elliott Wave theory to try to predict market movements in stocks and indices and other assets as well, and basically give you an insight into how and why I'm managing our portfolio or my portfolio on eToro that you can check out by following the link that you see here, as well as pinned in the chat and in the description down below. If you're new to Elliott Wave Theory, I recommend that you use the link in the description because you can read this book online for free or order yourself a physical copy, or check out episode number 1 of Daily Market Mastery because there I'm diving into the basics of Elliott Wave Theory. And besides that, I think the last thing to mention here before we get started is the usual disclaimer that you can also see at the bottom attached here, that everything that I share in this live stream / video, depending on if you're watching it live right now or later as a recording, is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. And I'm just quickly going to turn on or try to turn on the lights. Okay, one is on and the second one probably refuses to work still. Yeah, so I have to check why their Apple HomeKit integration isn't working. Anyway, doesn't matter how well lit I am here. Let's jump into it. By the way, all the tools that I'm using, so the software that I'm using and everything else, you can also find in the video description down below. Now here we have Motive Wave and we're looking at the VIX, so basically volatility index, that has like a new low. Not that relevant right now, it's just where we start off here. If we look at the portfolio, obviously after the last 3 years of incredible performance, I have to scroll a little bit so you guys see it. We this year are suffering quite a bit. I covered in a couple of episodes what I did wrong, basically why it happened. Yeah, nobody is perfect, but we're now in a turnaround point. So I actually expect that for the last trading days that we have in July, markets will drop further. I mean, there might be the one or other positive day in between. But yeah, like we will see if it's enough to get us into green in July already. But after that, we should actually have smooth sailing moving forward. Now, that said, we also started with the beginning of the stream, I think in February or so, we also started to open individual positions instead of just betting against the market. So as you can see, we have very huge positions betting against the market, our long-term positions here, that are already technically still profitable because they're responsible for the, let's drag that here, responsible for the gains that we had in 2022, where we took a lot of profits as well. And I'm confident that in a year from now, those will be in profit as well again, and that we actually will cash in big here as well. But again, no guarantees. That's just what I believe will happen based on Elliott Wave Theory. Now, as said, since February, we also have some individual positions, and you can see, for example, that we still have Domo here, and we still have Disney here. Domo currently up 13.91%, Disney currently down 10%. We will look at that in a second as well. But we also had a bunch more, and if we look at the last 3 months, we can see that we, for example, had Black Knight Inc. and in 3 months, that's 3 months roughly, with 2 positions, that's a 5-month position, 8% profit, 20% profit. Goldman Sachs only 2% profit because we decided to get out of that while we're still in green. Icon Enterprises 42% profit in basically a month or 1.5 months. NEO, what do we have here? That was like less than 2 months, 25% profit. Ford, 18% profit. Those were investments in the SDAO and SRTI where I sadly set the wrong stop loss and then it got triggered, so not individual positions. Shopify, we had for 2 months or less than 2 months, 30% profit. 3 months, 35% profit. Domo, we had for 12 days for 15% profit, and all those positions were entered based on Elliott Wave Theory. Yeah, so using Elliott Wave Theory, you can check out old episodes because most, or if not all, of those things are covered in old Daily Market Mastery episodes where I'm sharing the analysis of the stock and how Elliott Wave Theory applies and why I think that that pattern is the correct one and that we should enter now, and why I then eventually decided to take a profit. Yeah. Now, since we currently only have 2 positions left, like in Domo and Disney, we're gonna start with that. But before, we're actually gonna quickly fly over the SPX, NDX, the Russell 2000, and the Dow Jones. So if we look at the SPX, not much changed. We're still close to an all-time high, assuming the wrong direction. We have to update our pattern here. What's interesting, or what changed, is that we basically now have a trend channel up here, a nice one in quotes. So it's highly likely that we're gonna bounce from here. And then ideally finally start our journey for wave 1, 2, 3, 4, 5 down. Now theoretically, since that is a channel here, it could bounce and could go a little higher. We would have to work out exactly this pattern here to try to determine if it's in quotes guaranteed that we'll turn around here. But yeah, we've been suffering so long, and yeah, like I said, by the end of the year, I'm confident that this picture here will look way more in our favor. And so, yeah, I'm not going to spend more time on it today in this episode, since I did already in the last. Yeah, in the NDX, it's the same situation, just with the difference that we already have a clearer bounce. And again, with that bounce, we are now hopefully confirmed in wave 3, which means we should see a 1, 2, 3, 4, 5 taking us down out of that line. Obviously not in a week, not in a day, but over the next couple of months, we should go below the 10,000 in the NDX. In the Dow Jones, we have, similar situation in quotes, just with the difference that there might still be a little bit room up. So this wave C here might not be finished yet, but we can clearly also see an ABC pattern in here. As you see, it would suggest that the pattern still has room to go to 35,414, which would be less than 1% upside up, if it were to happen. And if that's the case, then yeah, so be it. We'll take the temporary pending loss before we then go on the journey downwards as well. And then we have the Russell 2000, and in the Russell 2000, we have to check if that invalidated the pattern here. There we have a high of 2,731, and there we have a high of 1,900. No, it's not invalid. So technically, while we retraced way too much, this here could already be wave 1, 2, and we should now be then in, what do we complain here? Wave 4? What wave 4? I don't have a wave 4 here. Okay, it auto-labeled it wrongly. Okay, let's get rid of that and zoom out a little bit. So this here could already be 1, 2, and then we would have 3, 4, 5 that take us to this point 3. And so 1, 2, and here we would have 1, 2, which means we would be in the third wave of a third wave. Now, if we were to go higher here, higher than this point 2, then it would invalidate this part here, and we would actually have to reevaluate here. But again, I'm still confident that all the indices will start coming down really, really soon. And by the end of the year, everybody that was worried or suffered through most of the year with me will actually be happy. Now, again, circling back, what do we have left? We have Disney and Domo here. Let's start with Domo. Domo is in a profit, and we already took profits before. And in Domo, actually, so Domo, we have what? We have right now 13.91% profit. And we were saying, so we have like the primary labeling where we would assume, okay, we are in a third wave of a third wave of a third wave, where this here would be another 1, 2, and with wave 3 currently in progress. So where this is 1, 2, 1, 2 in progress. So we might have a little bit downside here, and then finish wave 3 here. And our alternative theory was that it's a contracting triangle that basically died with that increase here. Yeah, so that theory is dead now. So don't need it anymore. Now let's check manage analysis, contracting triangle, delete. Yes, don't need that anymore. So it looks like we have that here. And if we have that here, then as said, then this might be like that. And again, that 1, 2, 3, 4 will then actually become this point 3 here. So that point 3 moves, that point 4 moves, that point 5 moves, that point 3 moves, and so on. So everything just moves further over there. And 3, 4, 5. So that 5 would then become that 3. And then in here, we would also have a 1, 2, 3, 4, 5, or 1. If it could already be that this is already wave 3 in here. So Domo, we will hold further. simply because there it looks like we're on the right track and we are in a third wave of a third wave of a third wave and so on, which should be the strongest upward movement. So Domo should in the next couple of weeks, if that pattern turns out correct, actually still have further bigger rallies coming. Obviously, if we look from a classical perspective, that was wave 2 finishing in our assumption. One, two, three. So we removed the idea of the contracting triangle, but looking at this now, I can also see, but then here we don't go low enough. So if that would be A, B, C, D, E, F. No, it doesn't work. So A, B, C, D, E, and E doesn't go low enough. No, contracting triangle doesn't work out here. So yeah, still the most valid pattern that I can find is the one we're looking at right now, which means we would have room to grow. Now, if Domo turns around here on us, which is possible, I mean, considering that 3 times in a row we had like lower highs, yeah, then our stop loss in Domo would be at 1159. So 1159 would be this point 2 here. Nope, it would be this point 2 somewhere here, yeah. So, or this point 1159, yeah. Could actually, technically, we could set it here as well, which means our risk-reward ratio is still great. So if we lose that here, yeah, it's like sucks, but we already had a couple of profitable positions with Domo that we saw up here. Where do we have Domo? So we already took profits here, and that's last 3 months, yeah. So it's not too bad. Or the alternative would be, and maybe we do that, like better safe than sorry. Maybe we take the profits here. So we close today at market open and close all and take our profits, which currently before pre-market consideration would be another 13.91% on that position. And we'll see how it plays out. So if we come down here, then potentially our wave 2 point was not correct, and we might still be looking at some kind of other corrective pattern here, in which case our sub-labeling that's led to our profit still worked out great, but our overall labeling is inaccurate. And if we see a rally go up further, we can join once we break out from either this channel or this channel, because then we will go higher anyway, yeah? So that's what we do with Domo. So take our profits here. And that leaves us with Disney. And Disney, where's Disney? There we are currently at -10. Well, in Disney, we basically got this invalidated, which means we got this invalidated. Oh, that's really, yeah, not bad, but... And here 4807, and that was low 85, 8407 and 8530. Yeah, like, so there are like multiple options. Option number 1 is wave 4 hasn't finished here. Option number 2 is wave 4 finished here, and this is 1, 2. Yeah, how far from our stop loss are we there? So let's check real quick. Disney. Our stop loss is 7907, so zoom out. Do we have a different pattern here as well? 1, 2, 3, 4. Our stop loss comes from that point here. So we have a potential 18% that we can lose from that position. And again, the position itself is the position itself is only 1%, so we risk around like 0.2% of our portfolio if we hit our stop loss, and yeah, our potential profit is much higher. Now, looking at this now, since it developed like this, I have to say that there is the likely case that we will be wrong here, and that we will go a little lower here. Question is if we will turn around before we hit that point, or if we actually will see a quite substantially bigger correction. Either way, we're going to wait this one out. So like, you can't always be right. If we take a look at the history, then again, now we're closing Disney at a profit, and yeah, like if it looks like this and in between we have Domo at a profit, sorry, If it looks like this and in between we have 1 or 2 losing trades, it's like more than perfectly fine. It's a high, very, very high accuracy in terms of when we're right. Yeah, so that being said, we now technically don't have a lot of positions that we are invested in, which means we wouldn't have a lot to cover in each episode, which also means it's time to take a look at if there, we already went very far ahead in the economic calendar and we looked at a lot of things already, like we looked at JPM for sure. Earnings would be blue only. Yeah, we looked at Tesla, Netflix, Goldman Sachs, MasterCard, probably Meta. Okay, maybe we didn't. Yeah, so basically we're gonna clean up here for now, and we're gonna obviously keep that, and we're gonna get rid of everything that we don't have invested anymore. So which means the only thing left is Disney, GameStop, and Domo. No, Domo we're closing today, so we can get rid of Shopify. Yeah, so we can get rid of Black Knight Inc. We can get rid of Ford. We can, GameStop stays, Domo gets closed today, Square or Block Inc., Netflix, so Disney and Neo, and that one, and JPM, and Morgan Stanley, and Goldman Sachs, and Icahn actually want to take a look at right now, so okay, Icahn will keep open and keep waiting, because there we said, okay, this is our, we ended roughly here, and here potentially 1, 2, 3, 4, 5. Although it could be that that is not wave 5 yet, but this is 1, 2, 3, 4, and now 5th wave developing. Either way, we will go here. So either we go down and then we have a finished 1, 2, in which case we can re-enter, or we go up first and then we go down and then we have a finished 1, 2. So either way, we'll keep Icahn Enterprises open for a nice re-enter opportunity. We also should have an alert for that already set, so that's nothing to worry about, because eventually I get the alert. And then let's take a look at Netflix, NFLX, the new chart, NFLX. There we go, in USD and open, and on a 2-day, no, actually monthly chart first, and there we go, and get rid of the stupid volume. And then first thing we do whenever we have a chart is we use TradingView and we check the chart there on the monthly history to see if we have all the history. So we have data here from 2002, and we can clearly see, if we look at this in arithmetic scale, that this looks like a 1, 2, 3, 4, 5, and then this whole thing here is one huge drop, A, B, and then actually the correction goes further than expected, but basically we would expect another correction. Doesn't have to go that low because we have the initial sharp drop and then we correct back here. So but we should be on the downwards way here. So we actually don't even need to label it here, because yeah, like let's see what the auto labeling does. Yeah, and it says 2 finished already here, and I don't think that's the case, because if we switch to a 2-day chart or so, decompose, yeah, it's possible, but I don't think that's the case. So I don't think that we actually finished wave 2 here, but that the whole thing here will be A, B, C. And so entering right now for Netflix does not make much sense, in my opinion, because the risk reward ratio doesn't check out. We would have to have our stop loss at 160 if this is 0.2, and our take profit would be somewhere in a new all-time high area, of course, because we would then assume that this here will be 1, 2, 3, 4, 5 and get us up there. But yeah, it's like not just as likely if we consider the time frames, how many years it took for this wave 1, and then suddenly wave 2 is supposedly just a couple of months, and that just doesn't check out. At least to me, I might be wrong here, but we're going to stay out of Netflix for now. I'm going to look at the next thing that we can find. So we had Netflix. How do we go about Tesla? Tesla for sure is also already, yep, Tesla. Yeah, and Tesla, I'm actually expecting that we're going down. Yeah, so like let's check which looks better here. Logarithmic scale. Yeah, semilog. So arithmetic. Yeah, so I mean, here it's also relatively clear. So, well, this might be, if we go from here, 1, 2, 3, 4, 5, which means we are in a corrective pattern. And I don't know why that's labeled 1, 2, 3, 4, 5, but basically that could be A, B, C, doesn't check out. So it could be 1, 2, 3, 4, 5, which would then be wave A, wave B, and which means wave C should take us down further. And if we look at a logarithmic scale, it's harder to spot, but it looks somehow, oops, wrong button. It looks somehow like this. Am I blind where the wave patterns? Yeah, here, of course, yeah. It looks somehow like this. So 1, 2. Oh no, sorry. 1, 2, or 1, 2, then that's the wave 3 breakout that basically gets us up till here, wave 4, and this here is wave 5. And then again, very often the corrective wave 2 will correct into the area or territory of wave 4. Now that's a huge dump of Tesla, of course, and I've been saying it for a while, but we'll see if we get there. Yeah, I mean, we'll see if we get there. So I'm not always right, so nobody's always right, but we'll see if we get there, and so we don't go into Tesla right now, especially if we then look at this. This here, yeah, like, I mean, it could theoretically be that this here is A with B, and then wave C would be identical, obviously not getting us down that far, but still substantial drop. Yeah, it could, however, also be that this here is, as said, 1, 2, and then that would be 3. Okay, that cannot be because we go higher here. So 1, 2, 3, 4 would also probably not work because that might be the shortest wave then. A, B, C doesn't work properly because then that doesn't subdivide into 5 waves. So yeah, like, so yeah, like, well, I'm not gonna spend more time trying to work out that corrective pattern here, or what I believe is still a corrective pattern in my opinion. I believe that we're still in the corrective phase and that we still have to see further drop for that to play out as an A, B, C, or any other form of correction. Yeah, we would consider entering Tesla if it becomes clear that this is not just a corrective pattern, which would require that we have basically a new all-time high. Yeah, like, because right now our risk-reward ratio here is by far not good enough to jump into that. Yeah, it doesn't matter what I personally think about Tesla as a car or brand, but it just doesn't make sense. Yeah, so okay, moving on, next one. So Tesla, Netflix, we have Goldman Sachs. Actually, we look for green, no, for blue earnings start data. Yeah, Google would be next. We have, probably I don't have it here. Google, there we go. On a monthly chart, clear whatever is there. And yeah, like there, I think we have a similar picture. So yeah, so might be. That's actually harder to label because we don't have a clear 1, 2 unless this here is 1, 2, and then that would only be wave 3, or wave 3 technically here, wave 4, or yeah, no, wave 3 here, even though we have a new high here, and wave 4 here, although also then the question would be, is wave 4 finished here, or is this A, B, and C still incoming? So considering how the indices, how the tech stocks rallied this year so far, and are the only thing that are responsible for our, in quotes, losses in the investments against the market, I'm actually going to assume that we're going to go down here. I'm going to assume that the hype about AI and so on will slowly fade, and however you want to call it, and that we will see a drop in the big tech stocks. So I'm going to assume that we're going to see the drop here, and we're also going to stay out of Google. Microsoft, yeah. So do I have them here already? That doesn't look like it. There we go. Maybe we find something that's worth taking a closer look and investing, or maybe we don't. We'll see. Okay, Microsoft has like an endless history, and it's interesting if we look here, 1, 2, 3, 4, 5. Yeah. So, and logarithmic a little bit harder to spot there. It looks a little bit more straightforward. So, but if that's the case, we are in a very similar situation here, because we would, we would assume, I mean, that Microsoft might still have room to grow, but it doesn't have to grow anymore for that to be a valid fifth wave. There might be that this is only 1, 2, 3, 4, and we still get another push with Microsoft, yeah. But from the looks of it, if we talk about Elliott Wave patterns, 1, 2, 3, 4, 5, works out fairly well. And then obviously after wave 5, we would have a corrective pattern that takes us down at least into this territory again. So question is, will Microsoft rally further first? So let's look at the weekly chart. Yeah, and kind of like it looks like the energy is gone, and we will also start to see a drop now. And but it's possible that we just see a drop and then see a new all-time high here. And then we'll wait and see what happens, and then we go into that. Now Visa, we don't have that one on our list yet, so let's check that. I mean, we found opportunities to invest before, so we'll find them later as well. So yeah, that's gonna be okay. Probably, nope, doesn't look much better. It's hard to label things like this because, well, we are probably 1, 2, 3, 4, 5, A, B, C. So we have like a 1, 2, but then we have no sign that we already finished our wave 3. I mean, here we start to move sideways, but I don't think that counts as a reasonable enough correction here, or that drop here that we had. So with Visa, it's hard to say where we exactly at least for me. I'm sure somebody with years more experience in Elliott Wave Theory might have an easier time. It could be, I mean, if we look at all this mess here, it could be that there somewhere we have our 1, 2, 3, 4, 5, A, B, C, and then we would actually be in the third wave, and Visa would actually be on the upwards trajectory, but it's not clear enough to risk our money. Yeah, so like I'm gonna also stay out of this, and I'm actually gonna adjust the webcam a slightly bit so you guys can see me better. Yeah. And we're also going to stay out of Visa. And then the next thing would be Meta. And that's the last thing we're going to look at today, because then our time for today is up. And yeah, and Meta, interesting. Yeah, also rallied on the AI hype. And let's see which looks better. Logarithmic, nope, harder to spot. Or yeah, like 1, 2, 3. Then we don't have a, we make a, we connect 1, 2. Let's check if that checks out. So do I have a trend channel here? Yep. So if I take this, this, then there we have the breakout from the base channel that would confirm that we're in a third wave. And then we take, how was it? We take 0.1, 0.3, and 0.2. So which pretty much we have here. So that would be our wave 4 confirmation. 1, 2, 3, 4, which would say 5. We have a huge drop here that 1, 2, 3, 4, 5. Yeah, that at least on this scale doesn't really work out as an ABC. So we have the same problem with Meta that we had before with one of the other stocks, that while theoretically this could be already our ABC corrective pattern, and we're here already in our wave 3 now, so 1, 2, 3, it's also possible that this here is just wave A, wave B, and that we're now gonna get to see wave free. And considering that I'm betting against the markets and believe that the markets will come down, yeah, like I actually think like that the scenario where this is wave B and we now get to see wave C is the more likely. We'll have to wait and see how it actually turns out. But yeah, also not gonna get into meta right now. Obviously a pity that we missed that entire rally, yeah, but I mean can't always be everywhere at once. And yeah, now that's it for today. We are at the 30-minute mark. Yeah, as said, so summary, it's gonna be interesting to see if we'll manage to get into plus for this month. So as we can see, we're still down 2.44%, but markets should this week also go down. And while our biggest positions and bets against the market for the last 6 months on long-term investments have been working against us like horribly and caused this almost 30% loss or temporary loss, I think the last couple of months and especially the Daily Market Mastery episodes also prove that Elliott Wave Theory is a reliable instrument to not only pick market entries and figure out when to enter, when to exit, but to also pick them when movements are going to happen. Yeah, so now obviously I'm sure because we had the last couple of months, some people will say we had a bull market. I disagree because mostly there were tech stocks that rallied. So if you look in the Standard & Poor's, I think the top 7 or top 9 stocks are pretty much responsible for the entire growth of the index, while the remaining 400, whatever, 90 something stocks actually just gained an incredible combined 4% or so. And despite that, we were able to find a bunch of opportunities in other stocks where we made like double-digit gains in months or weeks, yeah, and all of that with Elliott Wave Theory. And just by using the assumption that when earnings are upcoming, then very likely either earnings are going to disappoint and the stock might drop, or earnings might be better than expected and we might get to see a rally. And a rally usually would mean an impulsive wave in Elliott Wave Theory. So yeah, I hope you were able to take something away from this. I'm gonna debate with myself if we're gonna keep up the weekly format of Daily Market Mastery, because obviously since we usually look at 2-day candles, there is not much change week to week. I think right now it's gonna get more interesting again because we actually cleared out and took a lot of profits in the positions that we opened. So we now again have time to look for new opportunities, which means with each episode, we will be able to look at 1 or 2 new stocks to try to find something where we can enter the markets profitably. And yeah, so, but other than that, if we get back in a routine where every week we just review a bunch of positions, we might switch to a bi-weekly schedule or so. Anyway, thanks for tuning in. Yeah, as always, I hope you have a great week ahead, and then see you all next week with another episode of Daily Market Mastery. Till then, bye-bye.